Well, good afternoon. My name is Jim O'Donnell. I'm president of Equity National Title. I'm the moderator for today's session with two fabulous panelists, and the topic being, what loan officers need to know in order to be successful in the coming season. And we're not necessarily defining that by more 6 to 18 months or longer, depending on, what we all have to say about the trends that we're experiencing. Without further ado, I'll kind of introduce the speakers, the panelists. The first up is Brian Vieaux. Brian is the president and COO of FinLocker. When I was rehearsing that, I caught myself saying Footlocker.
Yeah, so, that's my night job. I fit shoes.
It'll bring you back to your football coaching days, right?
Yeah.
And so Brian's passionate about financial literacy and empowering lenders with digital financial tools to attract, engage, and retain customers. He's 30 plus years as an executive in the mortgage banking industry, has positioned him to help lenders execute an embedded finance strategy, transitioning from a transactional focus to one of continuous consumer engagement. I love that whole idea, transitioning from transactional focus. Brian also co-authored the book Rethink Everything, which I own a copy of, and I've been plowing through it. It's absolutely awesome, recommended reading, shameless promotion. And it's solidified his reputation as a thought leader within the industry. He is also a regular contributor on LinkedIn, where he shares his insights and expertise, and it's earned him 32,000 followers, which is probably top 20, I think, something like that. He began his mortgage career with Source One Mortgage, which was acquired by Citi. He went on to hold executive leadership roles at prominent lending institutions, most recently leading the TPO channel at channels, plural, at Flagstar. In 2005, he attained the Mortgage Bankers Association industry designation of CMB, probably an early one, I think, probably an early adopter there too, right? Yeah.
Yeah, probably wouldn't pass today, frankly. It was easier to get back then.
He's an alumnus of Michigan State University. We'll see how he gets along with David, because David's not a University of Michigan. And a former RESBOG member and co-chair of the NBA Wholesale Executive Forum. And he's currently a board member of the Downtown Boxing Gym Youth Program. It's a nonprofit teaching kids in Detroit's toughest neighborhoods valuable life lessons in and outside the classroom and the boxing ring. He's been doing that since 2007. God bless. Brian's an active board member for Access 360 Lift and an advisory board member for the Broker Action Coalition. Quite accomplished. Welcome and thank you for being willing to be part of this, Brian. We really appreciate it. David Hall. Yeah. David is the founder, president, and CEO of Hall Financial, bringing nearly 3 decades of expertise to the mortgage industry and driving the growth of numerous successful business ventures. He launched Hall Financial in 2016 with a singular mission, which was to offer an unmatched level of personalized service for clients navigating their most crucial financial decisions. And since then, Hall has earned nearly 7,000 5-star borrower reviews, and that's in a short 8-year period, reflecting the company's commitment to client satisfaction across the 10 states that they're licensed in. Prior to 2016, David had worked both at Rocket and predecessor of Rocket and a predecessor of United Wholesale for 16 years. In today's financial environment, David views mortgages as a vital component of the biggest strategy for growing wealth, managing expenses, and achieving long-term financial goals. He's known for his innovative mindset, which I've been pleased to be able to observe in person, encouraging his team to challenge conventional practices and seek inventive solutions. What distinguishes him is his dedication to questioning traditional approaches, which we'll probably hear about today. I believe our clients deserve a commitment to original thinking and new ideas rather than simply following established norms, he says. Outside of the office, he's an avid golfer. I think that's putting it lightly. As a collegiate athlete at the University of Michigan, he was a key player in the men's golf team. He earned the title of 1995 Player of the Year and consistently ranked among the states of Michigan's top 10 players. In his spare time, he enjoys mentoring young professionals, fostering leadership within organizations, and is a dedicated father to 3 children with his wife, Andrea. So, David, thank you also for accepting the invitation and willing to share, what your experiences have been. So, gentlemen, both of you are at 30 years experience in the industry, and you both work very closely pretty much every day with loan officers in varying ways. So take a couple of minutes to give our audience a little bit better idea of, who you are, what you do, and maybe even what a typical day might look for you, so you can give them a frame of reference from which we'll launch the Inquisition. So Brian, why don't you go first?
So first of all, Jim, thanks for the invite. Thanks for including me. I'm humbled and honored to share the stage, the virtual stage, with you guys, and David especially. David, I think when we got on our prep call, I joked, but it wasn't a joke. You were part of my morning routine when I'm working out and watching the morning local news here in Detroit. Your voice is there, loud and clear, man. I love it, and I love the consistency of what you do every day.
Thank you.
So, as Jim said, as evidenced by my not even graying, my gray hair, I've been at this thing for a while. I wrote my first loan in 1991. Spent 30 plus years, kind of in that primary mortgage production space. And before venturing into the fintech space, supporting mortgage, I led the third-party business at Flagstar, and that experience really was super impactful for what I do here now 5 years later, because in that role at Flagstar, I got to visit every day, virtually and physically, with loan officers and lenders of all shapes and sizes and models. And it really it still informs today how I think about the role of a loan officer, and in particular, how we at FinLocker try to be a support, a piece of technology to support that role. And one of the things I'm excited to kind of talk about today is my belief that the loan officer is the single best source of financial education and preparation for home buyers, especially first-time home buyers. And never has that been more important than today, with just all of the the macroeconomics, the microeconomics in any particular market, when you start layering in affordability and inventory and all those challenges. So I'm excited to kind of riff with you guys on where we see the role of the loan officer going, and how hopefully we can lend some insights for folks to take back into their daily business. I think you asked a last question, like, what does a typical day look like?
Yep.
There really isn't a typical day, I don't think, for any of us anymore. But you mentioned I have a decent LinkedIn following, and that's like a necessity for us at FinLocker. We're a small counterparty, a relatively smallish startup still, fintech, and so we're not afforded with a massive marketing budget and tons of resources. One of the things that I brought to the company 5 years ago was a network, both a physical network and then this digital network via LinkedIn. And so I spend a lot of time creating content. Hopefully it's halfway decent, and putting it out there. And what it's really helped me do is just study the power of social, not just LinkedIn, but the power of social media, and take what I'm learning in a B2B context and try to share my learnings with loan officers who are somewhat B2B if they're calling on real estate professionals, but also B2C in their efforts to build an audience of consumers. So I'm kind of a student of this social media thing, but I'm not on TikTok. You're not going to find me dancing on TikTok. I can promise you that.
No, that's good.
You have to dance to be on TikTok?
I think so. That's what I hear.
So that's only if you're a millennial or a next gen, I think.
Yeah.
David,
Well, great. Yeah, appreciate it. Great to be here. Just like Brian said, it's exciting. Hopefully share some insights and some of the things that have either helped me or help our company to become successful. Brian's like, he's done all the things that I want to do. He wrote a book. I haven't written a book yet. And he's a football coach. And my goal when I retire is I want to be the offensive coordinator for the local high school football team. And you get me out of the house so I won't drive my wife nuts. But I will say this, is that part of like what I've always admired about coaches from afar. I actually coached a little basketball when I was younger, just in my spare time, is the importance of being on script, because being on script is really, when you can be, it's important. So we talk about, what's your normal day look like? Every night, I take a lot of pride in scripting out my day the next day. And of course, like Brian alluded to, I get off script almost every day because things pop up, but now I have something to go back to. And I've always thought of that as part of my secret sauce in a land of, mortgage professionals who maybe aren't necessarily on script a lot. I felt like that was a big competitive advantage for me to be on script, and having played golf at University of Michigan and navigated some, for me, tough academics in terms of like trying to, excel there. I had to be on script. I had to be organized. There were a lot of kids smarter than me, so I had to take all the sort of the pieces of how do you become successful without being the smartest guy, and so I use that to my advantage. I try to do it today in our business.
Oh, well, thanks. That's a good picture that both of you have cast. So, you've obviously been in business for 30 years. You've seen a lot, and I think a hypothesis I have is that we're experiencing significant transformation in the industry. A little bit delayed because of COVID, a little bit delayed because of the interest rates, but it's underway. Some would say it's kind of the digitization of the business. I think it's a little bit more than that. What have you both seen, in the last maybe 5 years, significant changes, one or two major ones in the business that would have an impact on loan officers? And related, what do you think? What do you foresee changes in the next 12 to 18 months that would also, have an impact on loan officers?
Well, I'll let Brian tackle the future more. I'll give a little history lesson, I guess, because I wrote my first loan in 1996, so right about the same time Brian did. And I remember in the late 90s, a friend of mine who was a forward thinker and a smart guy said, your whole job is going to be eliminated the next couple of years because they're going to automate everything in the mortgage business. And I got all freaked out because I'm 2-3 years into this and I'm like, what is this guy talking about? And here we are 28 years later and the loan officer is still incredibly important. And the same thing that I used to teach guys 20 years ago is still true, is that everything that you want in your business is on the other side of this discomfort of asking for a referral, like going out, making an impression on people, being relatable, becoming trustworthy, asking people for business. Those are all the same principles that applied 20 years ago. Now, of course, a lot of things have changed. I mean, now you can do so much more business because of technology and the way that, we get the automated conditions, or the calendar appointment pops up in your calendar and you don't have to drive to the guy's house anymore. You can Zoom with them and you can send them the documents electronically. I mean, it's been major advancements that allow people to go from writing 20 loans a month to 100 if they want to, if they really want to scale. But a lot of the things are still the same that they were, but there have been plenty of enhancements. But I guess that's the one thing I would add. I'll let Brian, Brian's probably a better crystal ball guy than I am.
Yeah. Crystal ball, but I 100% agree with you, David, that, the stuff that I see working best right now in 2024 is what we all would probably call old school techniques, right? I mean, there's a reason why, I won't name names, but a significant mortgage company that built a highly digitized process and prided itself on not having commissioned loan officers hasn't been able to crack into the purchase money market, and it's had to go hire people in market, right? It's buying a home and getting financing for a home is not something that everybody can do without assistance rather, and especially first-time home buyers. So I think we're in this really cool spot where, to David, to your point, the really good loan officers who lead with a servant mentality and are an educator first, with the technology and tools available, they're able to scale themselves and be able to serve more people. And so I think if I'm a loan officer today and I'm not leading with education and educating consumers and realtors and other referral partners, I'm either figuring out how to do that, or I'm sharpening up my resume for the next gig. Because if you're not willing to serve people first, you're not going to win in this business.
Yeah, that's a great point.
Yeah, I appreciate that. So it made me wonder about AI, and I'm not trying to go down a rat hole with AI, but I'm curious because the response that David had about in 1996, you know, you're not going to be in business, you know, you're not going to be able to write loans. They're going to be completely invented. It reminds me when I joined the business in 91, I was hearing then about the advent of electronic closings, and that was happening, and it's here to, you know, almost 20 years, 30 years later, and it still hasn't been completely adopted, or in part it's been adopted. And I remember thinking about that, like, oh my gosh, you know, that's like the future, and it's just taken 30 years to get here. So I kind of think about that in the context of like AI and other things that look like they're going to be imperiling or threatening the job. So kind of talk a little bit about that, and I'll have a follow-up associated with that. So the thought about, well, you know, what do we think so far that you know, the AI could be doing to the role of the LO, if anything?
I mean, I honestly don't see a world where, you know, a bot, a bot is writing loans. I just don't see that, right? I think of a good friend of mine, Scott Shang, has been studying kind of all things AI, but more specifically things that are AI type tools like ChatGPT as an example. And he's kind of coined this term augmented intelligence versus artificial intelligence. And so where I'm seeing AI benefit at the top of the funnel is loan officers that are embracing the tools and using certain AI tools as a way to help them create more content, as an example, right? For ideation. But I don't see AI in, you know, at scale doing for first-time home buyers what loan officers do, in especially in an environment where more and more home buyers are having multiple jobs and are in that kind of that gig economy. So I think you can't ignore it. None of us can ignore it. It's probably the three of us on this panel probably used some piece of AI in the last 24 hours. I think you have to have, you know, a pulse on where the tools can help you. And again, I think about how I use AI. It helps me scale my ability to create some level of content. I don't rely on ChatGPT to write content for me, but it sure is smarter than I am a lot of times. And it helps me just think about ways to accelerate an idea.
Yeah.
David. Yeah.
No, just one thing I would add on to that is that in the same way that not everybody wants or needs the same furniture, and not everybody wants and needs the same stocks or 401k, whatever it is, you know, the mortgage business, I pause to say it's overly complex, but everybody's got a different credit score. They've got different down payments. They've got different needs. Some want to pay costs. Some want a higher rate with no costs because they're situational. So I don't see that going away, to Brian's point, but I'm open-minded to learning more about it, because I think all of us probably 2 years from now will know 100 times more about AI than we do today. So it's one of those early developing things where I think, you know, I know as a young person, I always wanted to know the most about it so fast, but it takes time to develop. So I'm kind of letting it take its time. We're using it in our organization as to how we go follow up with leads and things like that, but not in writing loans. So I think it can be used for marketing and for operations, but I don't know that it's ever going to, you know, replace a loan officer. We'll see. I'm open-minded. I don't think so, but, you know, I'll know a lot more in a couple of years than I do today.
I think that's the case for all of us. So last week when we did the trial run, I think, Brian, you kind of put out this picture of, if you have a loan officer today who's 80% referral, then that has to be inverted. You know, loan officer tomorrow, that's going to be inverted, where it's 80% self-generated. It sounds like it's going to self-generate it from social media presence and, you know, it's et cetera, et cetera. Maybe can you talk a little bit about that? Because I'm curious about that, and you know, how does a loan officer actually go about making that transition if they're dependent on their lender for referrals or realtors for their referrals?
Yeah, so I'm using this term, and I didn't come up with this. I'm not that smart, but I use this term hybrid loan officer. And when I use that term, I'm talking about the traditional distributed local loan officer who for decades has served their community and principally relied on referral partners, mostly real estate agents, as that tip of the spear for client acquisition. I want to say, first of all, I don't ever see that going away. I do think there's always going to be some subset of consumers that are, as they go through the funnel, they start with an agent and then get potentially referred or introduced to a loan officer. What I see happening, and it's kind of happening in real life right now, is part of it is the next generation home buyer is actually taking it upon themselves to start their readiness journey before they're ready to get in front of an agent, right? Part of it is there's so many tools and technology available for consumers, especially younger consumers, to understand their credit, right? We can all get our credit score and our credit report for free online, and now there's personal finance apps that are built around that experience. So tools like the Credit Karmas of the world, personal finance tools like Mint.com, there's Rocket Money and others have these self-serve financial tools. And so younger consumers they have them all on their phone. They're using them for different use cases. And so my view is that the loan officer can play a role right along with these pieces of technology by showing up first. And showing up today is not just showing up physically, it's showing up digitally, it's showing up on social. It's showing up where your home buyer is. And if we all can agree that Gen Z in particular, that first native digital generation, I mean, at some point there's going to be kids coming out of the mother with a phone already in their hand, right? We're probably not that far away from that. And so I know, watching my kids who are a little older than Gen Z, but they don't use Google as a search. They go to YouTube, they go to TikTok and search on stuff, and that's where they're learning not just about finance but about everything. And so if I'm a loan officer today who's been successful in that referral business, I'm doing everything I did there and do there to stay relevant to my realtor partners. But I'm taking all that knowledge, all that experience, all that expertise that I've amassed over my career, and I'm telling stories on social to an audience and trying to grow an audience of the next generation home buyer, because they're looking for information. We as loan officers should be in that spot to provide it. We are the best equipped to provide that knowledge. And I think that's when I talk about a hybrid, I'm really talking about getting out in front of consumers at scale, but not when they're raising their hand saying, I'm ready to buy, when they're literally just starting their thinking about process.
Yep. David?
Yeah, I have a lot of thoughts on this matter. I think, the one thing I would start with is that I think one of the reasons that Hall Financial has sort of planted our flag in the ground about service is because I personally like full service. And so I think I understand what that experience to get full service like. I'm not a self-serve guy. So a lot of people who are, self-serve, they just experience the world differently than I do. When I walk into a furniture store, I need somebody to guide me around and tell me what I should be buying. I have no idea what I'm doing, and I'm very aware of that. I don't pretend or fake it. So I assume everybody's the same way with a mortgage, especially because they only do it 7 or 8 times in their lifetime, so they don't know what to ask. That's why consumers all call, and the first thing they ask is, what's your rate? They've been conditioned to ask that. They don't know what else to ask. So I think the further you can get to Brian's point, the earliest point when people start looking and intercept them at that point in a positive way by building a relationship and providing them with the tools they need, you're going to have a lot of longevity. The social media is like the most interesting thing because, just like a politician, their number one job that they need to be good at is getting elected. Like if you're good at getting elected, you can be a politician. You don't really need to follow through. You don't necessarily need to do what you say, but you need to know how to get elected. And it's the same thing with being a strong salesperson. You got to know how to get to people when they need you. And then, you can have a team that sort of takes care of the rest. So the reason I bring that up is because being good on social or being good digitally, even if you don't know what you're doing that well, is incredibly important, and the consumer might not know the difference. Now, that's where we try to differentiate, and other companies do too that have had as much experience as we do. But you can't make that point strong enough that being out there early in a prospect's journey is incredibly important to be considered.
Yeah, one thing,
kind of-
add one thing, Jim, because I think this might help.
Absolutely.
This might help the loan officers in the audience kind of visualize or think about this concept. So we're all very familiar with point of sale. I mean, there's technology now is called point of sale, right? Where a lot of loan officers point people to their link, their app, whatever, for the loan application. What I try to have people think about is, yes, you have to be available at the point of sale. There's no question about it. But what are you doing to be relevant at the point of thought? And the point of thought is that 6, 12, 18 months before someone's ready to click your link and start their application.
So that's where, so I appreciate you doing that. That's a kind of a question that I have. The traditional model for an LO is to engage with somebody and take an app. And they're basically motivated and compensated to take an app, get it into the pipeline, run it through its course. But what you're talking about is something way upstream. So what we observe with both direct platform loan officers and retail distributed model loan officers, there's a difference between the two relative to, I'll call it the stickiness or the pull through. Consumer direct platform loan officers might give a ton of pre-qualified borrowers, and they might keep 15 to 20% of them. Retail might be a little bit higher because they're meeting the consumer in person. So I'm thinking about, how does the loan officer basically, become equipped, for lack of a better word, to contend with that way upstream, point of thought, as you said, borrower, and what are the implications for that in terms of how do they keep them? What are they leaning on and relying in order to keep them sticky? And then also, what happens to compensation? Because they could be sitting on something for 6 months and see nothing from that.
Well, it's a fascinating conversation because, sales and marketing sometimes will cross over with one another. Early in my career, again, just to give kind of an interesting story, there was somebody that worked in our business, and they would just, if you got somebody in the old days, quote unquote, people came to the office to sign their application. Like, we didn't just zip them out on DocuSign, you had to come in the office. And we had a person that was designated, they actually designated themselves, they would take the application, and they would get paid $100 fee to take the application. And we had one gal that was really good at it and would do like 7 or 8 a day, was making really good money. But the real money was getting them to come to the office, the sales and the marketing piece of it. So I figured that out real early. I'm like, well, you take the application, you only get $100. The guy that's selling the loan may be making $700 or $1,000, and it's like, okay, it doesn't take me long to do this math as to like where I want to be in that. And that got my juices flowing from an early age to be a marketer, to go to events, to meet people, to stop into real estate offices, because that's where the money was. And I think that's still where the money is today. I think being, a quote unquote order taker, some people do that and they do that well. But I think that if you want to really, have an excellent 2025, you got to be thinking about how are you going to really become the sales and marketer. So many guys, they want to analyze options and they want to read DU findings, and there's a place for that. But what we're talking about here to go and find the business is social, digital, events, realtors, go out and get them, right? So, it's an interesting question. Brian, I don't know if you share, a similar kind of a thought process or different.
I'd say definitely more similar than different. I think going back to what we talked about around AI, and it's not necessarily an AI piece of it, but one could argue, and I don't even think it's worth much of an argument, it is far easier today as an originator to collect information and data from a consumer than it was 10 years ago. Because 10 years ago, most of us were still handwriting a 1003 and physically collecting pay stubs and bank statements and blah, 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 blah. And today, most of the loan officers that I watch and observe, one of their biggest call, but in their mind, their best call to action is, here's my link. And then the computer is doing the work of collecting the data, right? So to your point, David, the biggest, the best thing that a loan officer could do in that model is to be getting as many people to that link as possible, and then let the technology kind of do its thing there, right? So in that sense, I'm on the same page. I'm actually also witnessing a handful of loan officers that are kind of going old school on the application process and not sending anybody to a link, and actually spending at least 15 minutes, most of it's over a screen, having that consultation with the idea that instead of the 15 or 20 or 30% pull through, Jim, that you described in a traditional call center, maybe I can take my pull through from 30% to 80% if I literally spend 15 minutes, 20 minutes, 30 minutes screen to screen with somebody,
Right.
asking questions that we all used to do. And that was the basis. I mean, we built rapport, asking questions and getting information, right? And
found out about people, you know? Yeah.
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 And so, I mean, I remember having a lot of conversations with families that were buying their first home and understanding that, you know, they've got, you know, a 2-year-old at home and they've got their second one on the way. You can't really learn that when you're just pushing a link out there. So I'm not advocating that we go back to handwritten 1003s, guys. What I'm saying is to the loan officers out there, think about how can you still build rapport while and stay connected to the consumer meaningfully? Because there's a lot of options for consumers. There's a lot of noise. There's a lot of people, you know, getting in front of these people, catching the eyeballs, if you will. You have to stand out in some way.
Well, and
Yeah,
Brian, to your point, like for a guy like me, and I think for a lot of people, there's a huge difference between somebody sending me a link and telling me to fill it out and saying, let's fill it out together. I'll walk you through it. I'm like, okay, that sounds a lot better to me.
I love that. Love that.
It reinforces your hybrid concept. Instead of that pure 80-20, it's that hybrid concept where you're using, you know, today's tools, Zoom or Teams or what have you, to step them through. We do some of that. When we have a first-time home buyer, it's not unusual for me to be on the phone with them, you know, when we're getting the getting the order, and then, you know, having them share their screen relative to their closing disclosure, their application disclosure in the contract, and reviewing and explaining it. It's not to be, you know, give them legal advice. It's not that. It's to explain it all to them. And we're using, you know, today's technology to be able to do that. And it's pretty effective. In fact, we just got a young lady and her husband that came back to us 2 years ago. They closed with us and they're buying a new home, and they said, hey, we want you to do that thing that you did before. So it's kind of you're using today's tools. You know, I'm a little curious, you know, that about the whole financial education role that you described, Brian, and I know that it's not being super literal, but I get the idea, generally speaking, or at least I've got a picture in my head. Now, traditionally, you know, an observation we've made in the industry is, especially for first-time homebuyers, absolutely, completely agree that that's an essential. However, you know, who they're interacting with tends to be a loan officer, and tends to be a realtor. And, you know, I'm not trying to knock either one, but my experience has been, my observation, I should say, is neither of them really, you know, do that. You know, they don't even educate them about the process they're going to go through. I mean, it seems like, in trying to not disparage our friends, the realtors, but the motivation is get them on a contract. Do you like the house? Let's sign the contract. Okay, now it's subject to the conditions. And the loan officer is, you know, application. And you know, I'm not trying to knock it. And that's been an observation over time. And I think maybe there's a transition coming. But how would they become, if I'm a loan officer who is inspired by what, you know, you guys are saying, and start thinking, yeah, I get it. How do I become educated enough to be able to, you know, be what you call in your book a teacher? One thing that when I saw that, I'm like, well, I think a lot of loaners would say, well, I already am a teacher. I'm explaining the loan terms. I'm teaching about the loan terms. But is it beyond that? And then how does a loan officer go about becoming kind of a expert enough to be able to have that position, meaning occupying that? I don't mean literal position, but that position, that space. Do you know what I mean?
So here's one way I think about it, and let's kind of isolate on the persona of a first-time home buyer, because I think it's easier for people to kind of grasp, that cohort, that segment of consumer. Maybe a little less today, because the average age of a first-time home buyer, I think, is in the mid-30s, mid to late 30s, maybe 36, 37. It's kind of edged up. But for a long time, it was, mid to late 20s was kind of that sweet spot for early first-time home buyers. And if you think about that 20-something, a lot of those consumers haven't really built up a lot of assets yet, right? And so they probably don't have a private banker. They may not have even a financial planner. And if they don't own a home yet and they're contemplating buying a home, I would venture to guess that in 90% of those cases, the home they're about to buy is going to be the largest asset on their personal balance sheet. And the loan to procure that home is probably going to be the largest liability on that personal balance sheet. So who better to play the role of a financial consultant, air quotes, they're not licensed as that, I get it, but who better to play that role for that aspiring first-time home buyer than a mortgage professional who understands how to help people procure the financing for that first largest asset. And so I kind of think about it, I put myself in that spot when I think about this. And I'm not talking about, expecting loan officers to understand, life insurance products and investment products. I'm really talking about anchoring on that large asset and that large corresponding liability, and being confident that everything else builds around those two things for most young consumers in their financial life. And so how do you show up? It's, if you're in a community like I am in the Walled Lake area in Michigan, maybe I'm showing up at a couple of the local churches that are conducting first-time homebuyer seminars, the old school, show up on a Saturday morning and we're going to do coffee and donuts and learn what it means to own and buy homes, blah, 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 blah. More likely, it's less of that and more showing up digitally. And the best way to show up right now digitally is kind of what we're doing in a long form video webinar, but doing it in bite-size, 3-minute segments that you can push out to your followers on whatever platform that you're on. The way I think about like what my kids do when they're referred to anybody for any product or service, first thing they do is they look them up on social to see what other people think about them. It's that social proof. And so if you're not putting yourself out there and doing it in representing your profession, then how are people going to validate you anyway?
Yeah, amen.
I think it's a great point. I think that, and people should do even more homework. I think people think because somebody's got a fancy social post that means that they know what they're doing. I mean, you got to dig in, and my wife is very good at that, as it relates to restaurants or places we're going to go, fortunately for me, because she's all over that, and she'll discover if like, hey, they got some negative stuff here. And so to your point, it's really important. I think one thing to note, to become a realtor or to become a mortgage loan officer is not a very high barrier of entry, right? You gotta study, pass the test, even to get into the title business. And so by nature of that, I'll use my own stat. I don't know if it's proven. 80% of them aren't very good. The top 20% are the top 20%. And that's not just to these industries. It's any industry where the barrier of entry is low. So like, hopefully that's not the case with doctors, right? Because the barrier of entry to become a doctor is very high. So you want to think that 98% of them are really good. And it's probably a lot higher than mortgage loan officers and realtors. And why do people get into a lot of times real estate or the mortgage business? Well, they think they can make a lot of money, and that's kind of their leader. And so my point in all that is that, going back to what I originally said, if you create a plan for yourself, a script, you stay on script, whatever your point of view is. I'm going to make 200 calls a day. I'm going to go to 10 real estate offices a day, and you're consistent with it, you will succeed. You will succeed if you're consistent with your script. Where most people fall down, the other 80%, they're just winging things, doing things different all the time. They have no consistency. Whoever's yelling the loudest, that's the direction that they head. And I think that's all normal your first couple of years in the business. I did a lot of that my first couple, but then you start to develop a plan. And if you really are planned out and thoughtful and organized, it's kind of hard not to be successful because you're so much ahead of the competition in a low barrier of entry business. So I think that's important for the audience to understand is sometimes we feel like the job is hard, and it is, but if you're consistent, I think you'll get into the top 20%. I wanted to make that note.
Love
I
that.
appreciate that. Hey, so let's talk a little bit about the consumer. The consumer is the borrower, obviously. So, again, lots of talk about the digitization of the mortgage transaction. I think we talked a little bit about this on the walkthrough, step through. And, that there's this effort to Amazon it, becoming more from fintech companies and being highly disruptive and making a bunch of clicks and buttons. I personally don't see that. I see, we talked a little bit about, the upstream, they need a Sherpa guide because of they need information. And we, maybe it's a bit biased, but we believe at the tail end, when you're finally closing, you got to pull it all together and put things in context and explain things. They need a Sherpa guide for that. So what's your view of that? The immunization of Amazonation, if there's such a word. I'm making up words now, for the transaction. Do you see it? Do you not see it? So, and then obviously the implications are, what does that mean to a loan officer?
I would say this quickly, and then I'll kick it to Brian, is that some transactions are kind of simple and they don't necessarily need high touch. But there are a lot of questions to be answered. This is how much money I have for a down payment. Is this going to work? Should I be doing this? This is my credit score right now. Should I be doing this right now? I've had friends, a lot of people that maybe they have like a 618 score and they could buy a house, but I tell them, let's work on it. And in 120 days, let's buy a house with a 740 score. I mean, and you just can't do that Amazoning it or whatever you said, Jim. I like that. So I do think that there's still a lot of high touch that needs to happen, but there are certain situations. Guy's got a 780 score, he's got 40% equity. Boom, he's going to qualify for the best thing. And there's not necessarily a lot of high touch. Now, he might also be self-employed and need somebody to help him with his tax returns because of the fact that he doesn't quite qualify unless we go talk to the accountant and we start being more creative or thoughtful about how to file those returns. And so, yeah. I mean, I think that there's like this famous saying, that there's no two situations that are the same in our business. And there's a lot of truth in that because it just, there's so many different moving parts between down payment and credit score and what your budget is and what you want versus what your wife wants. I mean, there's a lot to be sorted out. So I don't know, Brian, your thoughts about it, but those are some of my initial thoughts on the question. It's a little bit of a tangent, I guess.
No, I like that. I totally agree. When we talk about like purchase loans, in especially first-time homebuyer purchase loans, that's not going to get Amazon. It's just not going to happen, right? Rate term refi,
yeah.
W-2 employee. I mean, we know there's a box where
Yep.
some transactions could be, click button, get mortgage. I think we've heard that once or twice. So that, there are certain segments of consumers with certain products in certain transaction types that certainly can go through that process. But by and large, when we talk about where we are in today's market, when it's, a 75 or 80% purchase money market, I don't see it getting Amazon. But I do see, and this might be self-serving in the seat that I sit in, I do see more opportunities for loan officers and lenders alike to leverage technology further up the funnel to provide a Amazon-like experience with a Nordstrom-like concierge experience where you bring them both together.
I think people want answers and they seek simplicity, right? So it's like if you make it confusing, they're going to disengage. If you make it simple and lead them down a path, then it becomes a conversation. So I think that's absolutely right.
Yeah, appreciate that. So we can't let the time expire without touching at least on the realtor role, especially the NAR settlement. We talked a little bit about that in the walkthrough. Obviously, today. So that's, at least out there, it's still being talked about as potentially a big change. We may not be seeing the impact of that much yet, but I guess I'm curious, especially for loan officers, if they're reliant on the realtor for referrals, what impact are we going to see? Are we seeing, or do you think that we can see on the realtor role in the transaction? For example, there's a lot of talk about, well, borrower's going to skip the buy agent and go right to the selling agent. What does that mean? So I'm just curious what you've seen so far, what you've been hearing so far, and then maybe what you see, kind of foresee coming in the next, 12 months or so.
Well, I could end up being wrong on this, but to present day, it's just been a big bunch of not much as far as I'm concerned. And what I think back on is, if you'd have told me 25 years ago that the realtors would still be operating under a 5.5 or 6% model, given all the things that were going to come at them to cut into, you cannot underestimate the resilience of the real estate community, because they've held tight to their margins and kind of outlasted a lot of discount models that haven't really made it. And I also think that the NAR ruling has created some confusion, maybe not even necessarily with realtors, but I think that realtors just want to keep going business as usual, and they're running the show as it relates to buying or selling a home. So you want to sell your home, you need a good listing agent, and you've got to pay them. I think if you want to try and short your listing agent, I don't know that that's going to work, and you're going to attract the kind of buyers you want. So to me, so far, it's been a big nothing, but we continue to keep our eye on it because I don't know exactly what's going to happen with it. I think this is one of those things that you can really get consumed by noise, in our business. And I've even spent my own fair amount of time trying to chat with people about what it was going to mean, because I'm curious. But once it didn't do much, I'm like, okay, I'm moving on to doing business. I'm not going to worry about what could be. We'll see what develops in 2025 out of it, but feels like after a couple of months, to me, it's not much of anything, Brian.
I'm with you. I think what I was tracking, the average commission, if you will, right, on a home sale leading up to the whatever the September date was. And I want to say, and I'm going off of memory, so someone will fact check me and I'll get shredded on this, but that's okay. I want to say we were in the high 4 range on an average national basis in terms of the total commission. And then post the date, 30, 45 days later, that number hasn't moved. And then there's a guy, James Dwiggins. I don't know if you guys are familiar with James. He's a real estate professional. He's got an awesome podcast. And James talked about, to your point, David, the top 10% of listing agents, their world has not changed at all, because those agents, when they consult with their sellers, their mindset is about net proceeds to the seller. Never did commission come into the conversation. It was all about, let's talk about what you're trying to achieve in this transaction. And let's be real, what's important to you is what's going to be in your, what are you going to get cash in hand when this thing's all said and done. And so those same listing agents post September, whatever, are still having the exact same conversation. Now they have to talk about this concept of being willing to accept all offers. And some of those offers may include paying the buy side commission, right? But we're not taking our eye off the ball, which the ball is, what's the net cash in hand for you, home seller, post transaction. So I think that the top 10, top 15, top 20% of the agents out there, their life hasn't changed. I would argue their life has gotten better, because the bottom 20% are gone. They've already left the industry, and they're the noisemakers, frankly. And so I'm with Dave on this. I think it's been somewhat of a nothing burger. There's been a lot of interesting, webinars like this on the topic, but even those have quieted down in the last few weeks.
Yeah, I'm curious though about the change in for the buyer, right? So the buyer's got to arrange now probably have to shop for the buyer's agent and then negotiate, or at least just have to sign an agreement now, which is way upstream than typically they would be So I'm just kind of curious of whether or not that creates an opportunity for a new and a different model. I'm not sure about that, but I do think that that's a big change. My sisters, got a couple of family members that bought a house, and they, oh yeah, I mentioned the agreement. Oh yeah, we know about that. Dina explained it to me, so I just wonder whether or not that's going to give the buyer a pause. Because they have to think about, well, I'm going to be signing an agreement, and here's the financial terms of that agreement. So I'm just curious a little bit about that, what your thoughts are on that.
I don't know that pauses any buyers per se. I'll go off script. Why is it that even today, home buyers typically, at least we think they're typically looking for an agent first? Where else would you go buy a large asset before you know what you actually can afford? And so to me, it's been backwards forever. It's like the model should have been the other way all along, where I should go figure out what I can afford and really lock this down before I go, start looking at these great properties. There's a lot of looky-loos and there's all that kind of stuff. That's probably the stuff that goes away, right? You're not just going to go strolling through open houses, and you're not going to go sign an agreement to go look at open houses just for the fun of it. So maybe that's stuff.
You can't. The casual. Yeah, I think that one thing we've observed is that we call it the mortgage first borrower. We've seen a shift in the last several years to the borrower or prospective borrower going to the lender first and getting pre-approved. There's some conditioning that's occurred because historically they couldn't get into the open house because the selling realtor, that was the key to get in because they want to make sure that they're qualified. So they had to get at least pre-qualified, and that was the ticket. But we see that, a large number of, pretty good amount and are going to get checked out first, and they at least get pre-qualified. And to me, that's kind of like you just said, that it's been backwards for a long time. It's kind of like, why don't we board the airplane from the back first? So it's been backwards for a long time. And but I do see that. I think that that's a real trend. The mortgage first. We've got a couple of another. Yep.
On that note, a couple quick things. Number one is my whole life, part of my whole existence has been to try to get people to understand to do the budget first and then shop for the home. What I've come to find out, maybe I feel like I could write a book on this. People, the same reason that they walk into a store and they put something on the credit card that they can't necessarily afford, and then 30 days later, they're like, how am I gonna do that? That's just, you want it and you go and seek it, and then you figure it out later. There's a human behavioral thing. Yeah. So I think savvy and, well thought out people should do the budget first, but a lot of people just aren't going to do that. It's not the way the human mind is made up. That's number one. The other thing is, boarding the plane. So I'm obsessed with client service. When I buy an airline one day, Jim, that's one of my goals, is they are going to announce the row that is getting on the plane at that time, so I don't have this long line. I'm going to call, and it's going to be a fun thing. We're going to call a different row, and everybody's going to know it's every 90 seconds, and you better be in there. Boom. And so row 33, and then the clock of row 32. And it'll be a very organized way to board the plane. This is one of my pet peeves, so I'm glad you brought it up.
Hey, wait a minute, I got a question for you. How are you going to solve for window, middle seat, or aisle? It's got to be window first in line, right?
Yeah, I haven't thought that through yet. I'll consult with you. We'll rethink it, Brian. We'll rethink it.
So, hey, I know an airline that might take your advice. Southwest, they're still trying to figure that out. That's supposedly not until October. It's a pet peeve of mine as well. So it could be the last question. So what do you? So if you were a loan officer, you sort of, David, you kind of are in a way, right? And Dave, Brian, you've been. But if you were a loan officer today, looking out, in the next 18 months or so, given all that we've talked about, what would excite you the most? And in such a way that you'd say, hey, let me get a couple of my buddies to do this with me. So what's the most exciting thing?
I'll take what we talked about at the beginning, and I'll go back to that because I really believe in it. I'd I'd go really old school with everything. I think that the current, this is part of me now being in my early 50s. I think that the current loan officer is generally very lazy. I think they want to send out links and things to everybody. I'd start building relationships. I would be in real estate offices. I'd be making a difference. On phone calls, I'd be asking everybody for referrals. I think everybody wants to move to the ease of technology. And I think we've gotten away from asking for business, building relationships, and closing. And I think if you ask the uncomfortable questions and you build rapport and you understand people's goals, like that's where it's at. And I don't think it's ever not been there. I think all your best salespeople in the world in any industry do those core things. And I think that in the mortgage business and in other businesses, we want it to be like, we'll ship you the link, you send us back your stuff, and then I'll let you know. And you're not doing much if you're not building relationships and asking for referral business. So I just think it's critical, and that's what I would double down on.
That's such a great point, David, because if you think about a statistic that gets recycled every year right about this time is the retention rate across our industry, right? And I think the last time I saw it, it was like sub 20% of us as lenders, and maybe it's servicers, but it doesn't really matter. When someone raises their hand to refinance, as an industry, we're only retaining 20% of our original of our customers. And I would venture to guess that the bulk of the 20% that are retaining their customers are the people that are doing what David just described. They're building rapport, they're adding value, they're building relationships, they're being referred and talked about by others often. They're rolling up their sleeves. They're not just popping links out there in front of people. They're actually they're creating memories. They're being memorable by the service they provide. And if we're just link pushers, and now 6 years down the road when it's time to refinance, because that's really about the average, right? 4 to 6 years. How do I expect that customer to remember me if all I did was send them a link? I mean, really? And then I, this is a little soapbox. I get annoyed when I hear the loan officers pounding on the desk that the servicer stole my loan. It's like, well, wait a minute. Come on, man.
Yeah.
That's a different.
Didn't fall back into your lap. You actually had to work.
Right.
We experienced that complaint for when we call for payoffs. The servicer ate my lunch.
Yeah. So I'm with David on this one. It is a little bit. It's like old school all over again. To answer your first question though, what would excite me? If I was originating today, I would be excited by the fact that probably for the next 4 to 6 years, 30 to 35% of the home buyers are going to be first-time home buyers. They've never done this before. They don't have an established relationship. And so I have the opportunity to put myself in a position to earn their business, right? And if I can do that by being there for them 18 months before they're actually ready to click the link, so to speak, then what better way to earn that business through that, being that kind of source of education and building trust that way. That's what excites me.
And I want to say, I'm with you, and it's so true. And it's because, as loan officers, let's say they call realtors, and a realtor, what's the main objection? Well, I already got a guy. None of these first-time home buyers have a guy. And so that's the ticket. And that's why you get your way in and get started with a relationship. That's a refi, then another purchase. And if you do it right, you got a long-standing relationship with a client that's going to do 5 or 6 transactions with you over the next 15 years.
Love that.
Amen. Well, I think that you also inadvertently answered the last question, which was what's the one takeaway you want everybody to, what's the one takeaway you'd like them to take away from today's call? If there's something different you want to offer, please do. But that seemed like it was a pretty good summation of what you want them to walk away with.
Well, I would say over the last 2.5 years, for a lot of folks, it's been kind of discouraging. It's been really tough couple of years. Now, you can't complain that much when you have a year like 2021, which was like insanity. Yeah. I never would have thought we would see that. So I don't feel like, complaining about what came after that, but, staying positive in the midst of what's been a lot of adversity the last couple of years, I think is a secret sauce for a lot of people to stay and thrive in this business. I don't think that it's gonna get like way easier in the short term, but I think it'll be better than it has been, but I still think that there's going to be a premium on staying positive because, you know, it's always tough to be at your best when things aren't going your way. And there hasn't been a ton of consumer demand in the last couple of years the way we would like.
Brian, last word.
I just add one thing, because I think this is a great kind of tying in the talk on the social media. So David, you do a lot of your exposure's at a high level here in the Detroit area. It may be elsewhere too, but I see you a lot here. I never see any negative messages coming from you when you're on the radio or on the TV, right? And I would tell you that the same thing applies on social. So I do a lot of stuff on social, and nobody wants to see a negative David or a negative Brian. That's a downer. So I actually find myself by being positive on social, it actually lifts me up for the 99% of the time that I'm not on social. So if you're not on video, if you're not, you know, putting yourself out there, there's another benefit. You know, just put a smile on your face and talk positive and share great messages.
And I would close with this, you know, one big message is buy Brian's book. Shameless plug.
We didn't mean to knock Amazon, because that's the only place you can get the book, by the way.
Okay. Well, Amazon was listening, I guess, but
yeah, probably.
If Amazon won't let you buy it, come in to see me. I'll buy it for you. But buy Brian's book, because I think it's a recipe for, you know, for what you can be doing, you know, for success tomorrow as well. Gentlemen, thank you so much. This is well beyond the expectations. I appreciate it. I think that the audience is going to be thrilled, and you know, very, very grateful for you guys joining us today and being open and transparent, and most importantly, authentic. You've both been your authentic selves, and I appreciate that. Look forward to staying in touch with you guys, and look forward to how we might be able to work with each other in the future. But thanks. Take care.
Thanks, guys.
All right, bye-bye.